Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about JOINN interim report. JOINN Laboratories provides a range of businesses and services across three main segments. 1. Preclinical studies, drug safety assessment, DMPK studies, pharmacology and efficacy studies. 2. Clinical trial services. CRO services, co-managed phase I clinical research units, bioanalytical services. 3. Research model sales, design, production, breeding, and sale of research models, non-human primates and rodents. 4. Cell-based assay (CBA) services. The skyrocketing myth, unpacking JOINN Inc.'s financial reality. Contrary to popular misconception, JOINN Inc.'s stock price has not skyrocketed by 134.12% over the past year. In reality, the company's financial performance has been marred by a significant decline in its stock value. According to available data, JOINN's stock price plummeted by -95.61% in the last 52 weeks, with substantial drops of -78.27% in 2024 and -85.33% in 2023. The company's financial struggles culminated in a voluntary Chapter 11 bankruptcy filing in March 2024, followed by its delisting from the Nasdaq stock market. Ultimately, JOINN Inc. ceased operations due to its Chapter 11 liquidation filing on July 16, 2025. These events have led to a substantial decline in the company's stock value, rather than an increase. The primary drivers of revenue growth or decline in the company can be summarized as follows. Revenue growth is primarily driven by new projects signed, contracts secured for specific types of projects, and an increase in sales of research models. Additionally, the company has seen a significant increase in purchasing/raising of non-human primates. On the other hand, revenue decline is attributed to a decrease in gross profit margin, reduction in project unit prices due to intensified competition, and decreases in clinical trial and related services revenue as well as revenue in the PRC. Net income and profit margins. A tale of 2 years. The financial performance of a company underwent significant changes between two consecutive periods. Initially, net income decreased from RMB 211.3 million in June 2024 to RMB 105 million in June 2025. However, the company managed to turn its losses around and reported a profit of RMB 60.9 million. Profit margins also experienced a notable shift. The gross profit margin declined by 9.2 percentage points from 24.9% to 15.7%, indicating a decrease in profitability. Conversely, the profit margin for the period increased by 29.4 percentage points from -20.3% to 9.1%. This improvement suggests that the company's overall financial performance improved despite the decline in gross profit margins. The contrasting changes in net income and profit margins can be attributed to various factors, including operational adjustments, market conditions, or strategic decisions made by the company. Further analysis is required to understand the underlying reasons for these shifts and their implications on the company's future prospects. The company's financial performance indicates a consistent trend of generating positive operating cash flow. Pages 47 and 62 provide explicit evidence of this, with operating cash flows of RMB 148,751 and RMB 156,277 respectively. Additionally, the conclusion on page 64 reinforces this notion, solidifying the company's ability to produce positive operating cash flow. Performance overview. Our company's financial performance has been impacted by several segments and regions. Notably, the domestic innovative drug industry experienced a cyclical downturn, leading to underperformance. Additionally, our non-clinical trial and studies segment saw a significant decline in revenue for 2025, down -170,805 RMB 0 compared to the previous year. Furthermore, clinical services also reported a decrease of -10,635 RMB 0 in 2025 compared to 2024. These underperforming segments have had a notable impact on our overall financials, highlighting areas that require attention and improvement for future growth. Management is focused on maintaining stability and growth while maximizing returns for stakeholders. To achieve this, the company will optimize its debt and equity balance. Additionally, it plans to identify strategic investments that create synergies through acquisitions of high-quality targets. The company also aims to broaden clinical testing services, expand team capabilities, and increase investment in innovation. Despite challenges such as economic instability and reduced investment in pharmaceuticals, management remains committed to growth and expansion. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. Specifically, in August 2025, the company paid out RMB 0.03 per ordinary share as dividends, while also purchasing back shares worth RMB 76,609 for its share incentive schemes. Supply chain concerns loom large. The company's financial summary highlights a pressing concern regarding its supply chain. Specifically, there is an issue with the availability of raw materials, which could potentially disrupt operations. This problem has been noted in the company's documentation, as mentioned on page 26. The risk of inventory buildup or supply chain disruption poses significant challenges for the business. That concludes the financial summary for JOINN. Feel free to comment below, and I will be happy to answer them when possible.